Okay, these are the past year exam question. This is 2004 paper 2 question 1. Bring out your past year exam question paper, have it in front of you, and get a calculator ready with you. Okay, so this question says prepare a trading and profit and loss account of Goose Private Limited for the year ended 31 July 2004. B, prepare a cash flow statement for the year ended 31 July 2004, and C, prepare a company balance sheet. So it's quite similar to what I've showed you in part 2. Okay, so this one, these are the balances on 1 August 2003, and this is the transaction that happened during the year. And these are the balances at 31 July 2004. So you should adopt the step that I showed you earlier. That is go and do the layout of the trading and profit and loss account. Write it up, lay out your papers nicely, just like how I show you in part 2, part B, and then okay, part B, cash flow should have 2 pieces of paper. Okay, so this one, part C, I do the balance sheet and I do it in this format. In the exam, please don't do it in this format. The balance sheet should be in the statement format, just like how I showed you in the part 2 of this lesson. Okay, so I'll just use this format here because it's easy to see the figures in one papers. So this shareholders fund, long-term liability and current liability actually should be in another sheet of paper so that it will be in a statement format. So once you have laid down all your answer in pieces of papers, I will do what is easiest. Okay, so I won't keep flipping. So what you should do is you should have your question paper in front of you. Okay, so you see at 31 July 2004, I have all these balances. Okay, so now in my balance sheet as at 31 July 2004, I would have laid out, and it will be easy for me. So stock, I would just put inside current asset 29400, trade debtors 21300, trade creditors I'll put under current liability 17100. Doesn't matter, all these figures, it can be in any order. Okay, it can be, you can put trade creditors first, then accrued debenture interest next. Okay, so trade creditors is 17100. Proposed dividend. So as I said in previous lessons, proposed dividends are dividends that we promise to the shareholder but not paid yet. So it is same meaning like creditors. So that means the company owe the shareholder a dividend. So it's a liability. So put under current liability here, proposed dividend. So then you see we would have fill up the easy figures according to the question at 31 July 2004. You know, all these figures are easy to put, so I would have put it in the question already. Okay, you see here, you see there are some easy figures, you know, that you can just put in. Okay, sales, cost of sales, all these, I would just put sales 99,000 and then cost of sales. You know, you would have laid out your question paper just like how I told you before. So cost of goods sold, just 72,000. Then sales minus cost of goods sold, you will get gross profit. Then here, less expenses. Expenses, actually, you just copy from the question paper. Wages is 10,500. Okay, then 5,008 is the selling and admin. And then depreciation is okay, so wait, depreciation. So now we will go back to the balance sheet. Okay, so balance sheet. So in the question, transaction for the year ended 31 July 2004. Okay, plant and equipment purchase for cash. Okay, it's 9,000. Okay, 9,000. Okay, so at the top of the question, at 1 August 2003, plant and equipment at cost is 23,000. Okay, then provision for depreciation is that means it's same meaning as accumulated depreciation is 12,500. So this one, I just put one figure here. This is the net book value. Okay, 23,500. 23,000 minus the accumulated depreciation is 12,500. Okay, plus what you buy during the year is 9,000. Okay, so then I would like to calculate what is the accumulated depreciation. I mean, well, I would like to calculate what is the depreciation for the year. Okay, if you look at the question, over here, all plant and equipment are depreciated at 10% on cost at the end of the year. Okay, so in the profit and loss account, I put here depreciation. So what is the cost? The cost will be 23,000. You know, the plant and equipment at cost at the beginning of the year is 23,000, plus the cost that you purchased during the year is 9,000. So 23,000 plus 9,000, close bracket, times 10%. So this is the depreciation for the year, 3,002. So in the balance sheet, you take the cost at the beginning of the year plus what you buy minus the accumulated depreciation at the beginning of the year minus the depreciation for this year. Then you will get the net book value, okay, of fixed assets. So I put here. Okay, so then another one, another caption, intangible asset, goodwill. You see, at 1 August 2003, the goodwill is 8,000. So I put here 8,000 first. Then I hold on a while. I wait first. Okay, what is goodwill? So now if you look at the question again carefully, okay, you see here, acquisition of net asset of Gander Private Limited for cash, note 3 below. Okay, so you see, this company Goose has buy from another business owner. Okay, during the year, Goose Limited purchased the following asset and liability of Gander Limited, which it brought into the books at the following valuation. Okay, so if you total up this, okay, 18,000 plus 15,000 minus 11,500. So use your calculator. 18,000 plus 15,000 minus 11,500. I get 21,500. Okay, but the company paid 24,500 to the previous business owner to buy over this company, which has this asset, bring in this company into this business. So the net asset of this business is 21,500, but the company paid, you know, Goose Limited paid 24,500 to the previous business owner of Gander Private Limited. So we have paid more than the net asset of this company. How much more we have paid? So the net asset of this company is 21,500. We paid 24,500. So that means we paid 3,000 more to the previous business owner for the goodwill of this Gander Private Limited. Yeah, because we think that we are willing to pay more to the previous business owner, because we think that this business, on top of these net assets that we are bringing in, we are also bringing in some intangible asset. That means some things that cannot be seen, like regular customer. So when we bring in this business, this company now belongs to us, the customer will still continue buying from this company, correct? So we are willing to pay 3,000 more to the previous business owner, because we are bringing in the goodwill, such as continuous regular customer, and also loyal and skillful employees, and we could be bringing in some trade secret. So the goodwill that we have brought into this business, we have purchased together with this business, is 3,000. So at the beginning of the year, the goodwill that the company already have is 8,000, plus this year we have brought in another 3,000 of goodwill. So that's why goodwill is 8,000 plus 3,000, that will be 11,000. Okay, so you see the question, sometimes the question could be not very clear, but by going through all the past year exam question, we can spot the trend of all the past year exam question, and we roughly know what they are actually expecting and asking. You see, at 31 July 2004, these are the balances um, of asset and liability of Goose Private Limited. Okay, so we are assuming that these balances is inclusive of these stock trade debtors and creditors that we have brought into the business. So that is because by going through all the past year exam question, we can get the indication that this is the expectation of the question. If you want to make it even clearer in your answer paper, you can put an assumption note somewhere below the balance sheet, saying that it is assumed that uh, the stock trade creditors and trade debtors and trade creditors given in the question is inclusive of the assets and liability purchased from Gander Private Limited during the year. Okay, but for me, I don't think it's necessary because from doing all the past exam question, it appears that this is the expectation of the question. Okay, so that means this, in conclusion, that means these figures is inclusive of this. Okay, so here number 4, it says that debenture interest is payable annually in arrears. In arrears is opposite of in advance. In advance, that means you pay beforehand. In arrears, that means you pay at the end. Okay, so they said debentures interest is payable annually at the end of the year. So here, issue of 6% debenture stock for cash on 1 November 2003. Okay, so that means the debenture interest will be paid at the end of the year. That's what the question says here. Payable annually in arrears will be paid on 31st October 2004. So that means at 31 July 2004, the debenture interest is not paid yet. But we have to take it up. We have to accrue for it in our profit and loss account, the debenture interest as an expense. So debenture interest will be 60,000. The question says is 6% debenture, so times 6%. And how many months was it? It's issued in 1 November. So how many months, as at 31 July, how many months have passed by? Okay, November, December, January, February, March, April, May, June, July. That is 9 months. So 6% is for 1 year. What is the so if you want to calculate the interest for 9 months, you should take times 9/12. So the debenture interest is 2,007. This debenture interest is not paid yet. That's what the question says, is payable in arrears annually. Okay, so in the balance sheet, we will treat it as a liability because it's not paid yet. So we call it accrued debenture interest. Accrued, that means not paid yet. Okay, it's 2,007. Okay, so then the dividend, we don't put it under expenses, so we calculate the net profit first. Then the question says at 1 August 2003, accumulated losses brought forward. Accumulated losses brought forward is 3,004. So the sum is 1,004. And then the proposed dividend, you will minus off from this what they call the total net retained profit available for operation. So this is the retained profit. So minus proposed dividend, this will be the accumulated losses carry forward, which we will put in the balance sheet here. Okay, it's 500. Okay, this ordinary share capital, where do we get a figure? We get a figure also at in the question under at 1 August 2003, ordinary share capital is 7,005. So this will total up to 7,000. Okay, 6% long-term liability, 6% debenture stock is also given in the question. Under transaction for the year, issue 6% debenture stock for cash. So all this I have explained to you already, and so is all this. So we get a balance sheet and it balances. Okay, so in the cash flow statement, so I can fill up the figures in any order that I think convenient because I've laid out my paper. Okay, so cash and cash equivalent at the beginning of the year is negative 23,600 because I get it from the question. At 1 August 2003, bank overdraft is 23,600. So bank overdraft is a negative bank balance. So I put it in bracket. Okay, this is what I can get from the question. Okay, under cash flow from financing activities, proceed from issue of 6% debenture stock. This is money come in from financing activities. Yeah, so in the previous lesson, I've explained to you all these shareholders, debenture holders, bank giving loans to company. These are so-called people who are financing the company. Financing. So you see this one debentures stock is under long-term liabilities. These debenture people are actually financing the company. So shareholders are also financing, but the ordinary share capital was paid last year, so it's not inside this year's cash flow. Okay, so this is how I get the 60,000. Okay, net profit 4,008, which is from here. Okay, from the trading and profit and loss account, 4,008. Depreciation also from here, from trading and profit and loss account. Okay, so this is the net profit. And then, okay, so you see this is the net profit after interest. In the cash flow statement, you can start with net profit before interest, or you can start with just net profit. So if I start with net profit before interest, then I will straight away put the net profit before interest figure here. So what is the net profit before interest? This is net profit after interest. Net profit before interest is 4,008 plus 2007 plus 2007. Net profit before interest, okay, net profit before interest expense means net profit before minus the interest expense, right? Will be 7,005. But if I want to put the net profit figure here, then I add back the interest expense in here is also correct. So now that's what I'm doing here. So I take the net profit and then I add back the interest expense here. Okay, the depreciation also I add back. Okay, you see, especially the net profit before interest. Okay, this interest was not paid. Remember, it's accrued, it's not paid yet. So that's why I add back here. So let's say if the interest is paid, so this one will be, I add back here. Then I will minus out from here. Cash generated for operation. Then I less interest paid. Then I get net cash generated from operations. Okay, so this one I subtotal and then I get here. So increase or decrease in stock. So that means you take the difference between the year-end stock and the year beginning stock. Okay, so there is a bit of trick here. You see, this is working capital changes for the company. And then under investing activities, acquisition of Gander Private Limited. Okay, so we have paid 24,500 during the year. We have paid the previous owner 24,500 during the year, and we brought in the net asset of that company, and also we brought in $3,000 of goodwill. So this is so-called what we have paid for buying the net asset of Gander Private Limited. So this is our money go out for buying the which is accounted for under cash flow from investing activities. So over here I did not put cash flow from slash bracket used in investing activities. These are some of the minor details which sometimes I'm not so accurate in, but it's not absolutely wrong, because in accounting there's no so-called fixed formula. So this money go out for buying the net asset of Gander Limited is accounted for in investing activities. So why should you account for the purchase of stock, trade debtors and creditors from Gander Limited under operating activities? You see, I made some mistakes some inaccuracy here. So the title for this, you should put also cash flow from slash use in operating activities. Okay, so you should add the heading for this one here. Okay, so so over here we are using the indirect method to calculate the cash generated from operations. Okay, we are using the indirect method, which if we use the direct method will be cash received from customer minus cash paid to all suppliers. That's it, 2 lines only. Okay, so that means the cash part from the operating activities should exclude this purchase of the net assets from Gander Limited, because the cash outflow is already accounted for under these investing activities. Okay, so that means the increase or decrease in stock should be you see, this one we have already assumed that is inclusive of this 18,000. So now you use your calculator. Now if we exclude, so you take your calculator, 29,400 minus 18,000. That will be 11,400. So the stock that that belongs to the company, excluding the one that we bought from Gander Limited, is 11,400. The beginning of the year stock is 6,600. So that means the stock have increased by 11,400 minus 6,600, has increased by 4,008 during the year. Okay, so as explained earlier, increase in stock is money go out, so increase in stock is a bracket 4,008. That's how I get the figure. Trade debtors, same thing. Okay, so you see, the trade debtors is 21,300, is inclusive of this that we have purchased. So you take 21,300 minus 15,000 is 6,003. Okay, trade debtors at the end of the year is 6,003. Trade debtors at the beginning of the year is 12,001. Okay, so 12,001 minus 6,003. So that means trade debtors has decreased by 5,008 during the year. Okay, 12,001 minus 6,003 is 5,008, has decreased. So decrease in stock is money come in. Okay, because just decrease in trade debtors is money come in. Trade debtors means they owe me the money. So if the trade debtors decrease, that means they pay me back. So if they pay me back, it's money come in. So it's 5,008. Okay, so that means this is a decrease in trade debtors for the company. So the money come in from trade debtors is 5,008. Okay, so you see trade creditors, same thing. This 17,100 is inclusive of this. So if you exclude it, 17,100 minus 11,500 is 5,006. Trade creditors at the beginning of the year is 7,009. So that means trade creditors decrease minus 7,000. So trade creditors decrease. Creditor, that means people whom I owe money to. So if the trade creditors decrease, that means I pay them back. If I pay them back, that means money go out. Money go out. So negative 2,003. So this is the cash generated from operation is 9,004. Okay, there are a few ways of doing the question. So over here, dividend paid, I put in operating activities. So previously, how did I show you? I show you that you should put this category also, cash flow from use in investing and servicing of finance. So there are a few ways of doing it. One way is like just now, under operating activities, I put dividend paid there, or I can put dividend paid and interest paid in this category, interest received. Okay, so either way is correct. Okay, so this is so I explained here, and the trade debtors and trade creditors figures here should exclude the one that is purchased from Gander Limited, because the cash flow from acquisition of Gander Limited is already accounted for in investing activities. Okay, so investing activities, purchase of plant and equipment, 9,000. is actually given in the question here. Okay, transaction during the year. Plant and equipment purchase for cash. So purchase of plant and equipment is money go out, so put in bracket. So this one is the net cash generated from operations. So net cash used in investing activities. Even if you don't, if you put a heading and then you don't put this, it's still correct because it's understood. The heading already says net cash flow from / used in investing activities. So I'm just repeating here, being a bit long-winded. If you don't put, it's also correct. Okay. So this one I explained already. So then over here is this one minus this one plus this one. You will get this figure. This one minus this figure, you will get cash and cash equivalent at the end of the year. So put it in the balance sheet. Bank, 10,700, or bank balance, right? So, yeah, we completed. Yeah, this one 2004. So if you lay out, even some of the figures that you really don't know how to put in, or you put in wrong figures, so you will still get the majority part of the, most of the marks of the question, because you lay it out, you can put the numbers whichever you know, right? So you can get most of the marks, even if you can't get the full marks. So now 2005 is a more difficult cash flow question. So you should get ready 2005 question. So the question says prepare a cash. You see this question is 25 mark, paper 2. Paper 2 got 4 questions and you should finish it in 3 hours. So that means each question you should allocate 45 minutes. And then here say prepare a cash flow statement for a 2-year ended 31 August 2004-2005 in a columnar form. And then this is only 17 marks. Then part B, comment on the financial performance over 2 years using 2 ratio. So that means this question you have to finish in 45 minutes. You got to do in lightning speed, very fast, right? You have to do very fast, otherwise cannot finish. You see, some of this cash flow looks like very complicated, and 2 years cash flow, huh? So do very fast. So that's why I do so messy, because a bit messy, because I did it very fast. Okay, so plan your work, layout of paper, Kerosene Limited cash flow statement for the year ended 31 August 2004-2005. And then all the figures are in dollar sign, in thousands. So I put it in thousands. Don't even have time to draw lines, okay? So have to be very fast. Cash flow from / use in operating activities. Then cash flow from / use in return on investment and servicing of finance. Then cash flow from / use in investing activities. And cash flow from / use in financing activities. Okay, so I lay out my paper. Then this part also I do out right up first. Cash and cash equivalent. So then I allocate one more piece of paper, a few pieces of paper for workings. Working, then bracket W. Okay, these are my workings, and then I have a part B. Okay, so now, so we have to get ready. Those who are very ambitious, you can take your paper and do it while you're watching the video. Okay, so get ready all your headings. Okay, so previously I told you to start from net profit before interest. Okay, so now the question did not give us net profit or net profit before interest, but we have operating profits here. Okay, as we go along, I will explain more past year exam questions, and you should follow all the lessons carefully. So operating profits mean more or less means, not exactly, but more or less means net profit before interest. Okay, almost there. I mean, roughly the same. Okay, so we have operating profit, then they put here interest received, interest paid. Okay, then dividend paid, transfer to capital redemption reserve. Then what is this 2960 and all this? So yeah, don't know how the figure runs, but never mind. So since there's no net profit before interest, but now from now we know that operating profit more or less means net profit before interest, so we will use operating profit. We can use operating profit. We can start with operating profit. So 2004, 2005 is 5,005. So you should have the question paper in front of you so that I don't need to keep turning to and fro, up and down, and I can just concentrate on the answer sheet over here. So operating profit is 4,009 and 5,005 as stated in the question. So very easy. Interest received, just copy from the question. In 2004 is 50. Okay, you see all the numbers are in thousands, so it's correct. 50 and 2005 is 30. Interest paid also copy from there, 4,007, 7,009. Okay, dividend paid, wait first. Okay, then adjustment, depreciation. This one also very difficult. Can I leave it first? Because I have a layout on my question nicely, so I do whatever that is easy one. So working capital changes are increase, decrease in stock. This is not difficult. So I have also put here increase in stock, put in bracket, because I put all this so that I won't get myself confused. Okay, so increase, decrease in stock. I'm sure you can count, right? So that means you take the difference between the this year and the previous year's stock, see whether it increase or decrease. Okay, debtors and creditors. So do this part because this is definitely easy. Okay, the difficult ones: dividend paid, depreciation, profit and loss on sale of fixed asset. Difficult. I wait. That one I wait. Okay. Okay. So then I come to this part. Cash flow from investing activities. Purchase of fixed asset also quite difficult. This fixed asset a bit difficult. Can I just wait because it's quite difficult? Okay, then I come to financing activities. This is not too difficult. Okay, so then I look at the question. Okay, that we have 5% debentures repayable 2008. Okay, so you see the debentures, 5% debentures, it reduce, and then this one reduce. That means what? We pay back the company, that means we pay back the debenture holder their money, okay? And we redeem back the debenture certificate. We take back the debenture certificate and give them back the money. Okay, so that means this one we will put it redemption of 5% debentures. We take back the debenture certificate and we pay them back the money. So it's money go out. Okay. Okay. So in 2004, we redeem back 3,000 of debentures. So that means we pay them back 3,000 to the debenture holder. So money go out 3,000 for redemption of 5% debentures. Okay, also write all these terms nicely. Some people just put debenture. Oh, wow. So it's not, we cannot assume that it's understood. We write this term, follow how I write. Okay. Then 8% debenture, it increased during the year. Okay. You see, this figure is the figure at the end of 2003. So that means end of 2003 is same as beginning of 2004. So beginning of 2004, there was no 8% debenture. At the end of 2004, there is 2,000 of 8% debenture. So that means from the beginning of 2004 to the end of 2004, money come in 2,000. Okay. So proceeds from issue of 8% debenture is 2,000 and 6,000. You see, that's why I purposely put the lesson on the company as lesson 4 and over here is lesson 5, so that you understood that lesson first, then you need to come to here. Those who want to jump, you cannot follow. Okay, so then redemption of 6% preference shares. So we see at 6% preference shares, it decreased. So that means we pay back the preference shareholder their money. So put bracket, money go out. Share premium account has actually increased. So what do you understand by share premium? Share premium means the share issued at above par value. So if the share premium account increase, if the share premium account increase, that means it's actually money come in. So that here, so over here, I just put share premium, it's okay. So the share premium account increase, that means it's money come in, okay? The ordinary share of $5, that one is at par value. $5 is at par value. Share premium means the excess, the excess of the ordinary share issue in excess of par value will go to the share premium account. Okay, proceeds on issue of ordinary share at $5. So it increased, so the increase we put inside here. So this is money come in. Okay, so we got all the financing activities done. Okay, then some of you may think, then how about this one, capital redemption reserve, revaluation reserve? Is this money come in? No. It doesn't. This one there is no cash flow, right? Yeah. This one is just, from the profits, from the retained profit, we transfer to capital redemption reserve. And then revaluation reserve also, because the property was revalued outwards, so the increase we will add to the property value, and also so that means we will debit to the property value and we will credit to the revaluation reserve and put it in here. So that means this capital redemption reserve and revaluation reserve and all the other reserve is not a cash flow. That means it does not involve money come in or money go out. So we won't put it in the cash flow statement. Okay, so then so we have put in all these easy figures. Okay, dividend paid we don't know yet. So all these easy figures we have put in. Okay, then now we look at dividend. I will do in the order that I'll do those figures that I find it easy one first. Okay, so you can also do it in whatever. You can also do whatever figures that you find easy one first. Do the easy one, then gradually do the more difficult one. Okay, you see proposed dividend. You can think of proposed dividend as something like creditor. Okay, you can think of proposed dividend, that means the company owe the shareholder the dividend is same nature like creditor. So at the beginning of the year we owe them so much. Then at the beginning of 2004 we owe them 620. Then during the year, this is 2004, during the year we promise, including some that is paid, we promise to pay them 1420. Okay, so that means if we have paid nothing, okay, so at the beginning of the year, use your calculator. At the beginning of the year we owe them 620. Plus during the year we promise, including some we have paid, we have promised to pay them a total of 1420 plus 1420. So add together 620 plus 1420 will be equals to 2040. So that means assuming if we have paid no dividend, at the end of 2004, we should owe them 2040. But we owe them only 800. That is because 2040 minus 800 is 1240. 1240 is what we have paid to the shareholder. So dividend paid to the shareholder during the year is 1240. Yeah, do you follow? Some students may like to do it in a T account format because you could be very familiar with this T account. Yeah, you can do. You see, this proposed dividend is same nature like creditor, so the balance brought down should be on the credit side. So the balance brought down at the beginning of 2004 is 620. Then during the year in the profit and loss account, dividend paid and proposed is 1420. So the profit and loss account dividend, so-called I call it the dividend expense that is deducted from the profit and loss account is 1420. Okay, it's the same nature like expense. Okay, 1420. So that means assuming if we have paid them nothing, we have paid no dividend, we at the end of 2004 we are supposed to owe them 2040, okay, but at the end of the 2004 we owe them only 800. So 2040 also I put here 2040 minus 800, so that means 1240 is the dividend that we paid them during the year. Okay, so 1240, we put it in this part of the cash flow. Okay, so now this 1530. Okay, so now you see here at the beginning of the year, beginning of 2005 is same as end of 2004. We owe them 800. Use your calculator, 800. Plus, during the year 2005, we promised to pay them 1660. So plus 1660 will be equal to 2460. So that means assuming if we paid the shareholder no dividend at all, so that means we should owe them 2460. But over here is only 930. Okay, so at the end of 2005 we owe them only 930. So how much have we paid the dividend to the shareholder? So will be 2460 minus 930 will be equals to 1530 is what we have paid them. So 1530 we put here. Okay, so you can do the workings that way, or you can do the workings in this T account format. So at the beginning of the year we owe them 800 plus what we dividend paid and proposed, what did we promise them, so will be equals to 2460. But at the end of the year we owe them only 930. So that means 2460 minus 930, 1530 is what we paid them during the year. You see, this is a workings. So even though some of the figures here you didn't put it accurately here, so this year, assuming instead of put bank you put year paid, it is still correct because it's just a workings. They are not asking you to prepare a proposed dividend account. Then it's different. You have to do very accurately. If you are just doing it as a workings, even though as long as you get the numbers right and you slot it into the cash flow, even your workings is not so accurate, it's okay. So this is how I get these figures. Okay, so all these figures I've done. So this one, cash and cash equivalent at the beginning of the year. Actually, I can do up this part because this one I can get the number here, cash and cash equivalent at the beginning of the year. So you see, cash deposit is a cash equivalent, bank is a cash equivalent, bank overdraft is a cash equivalent. Okay, so can you calculate this 400? Okay, take your calculator. 400 plus 390 minus 250. Minus 250 is 540. So cash and cash equivalent at the beginning of the year is 540. Okay, so that's why I write the number here, because it's easy to get what gets this find from there. Okay, so then this one 2004, same. Cash and cash equivalent will be 550 plus 120 minus 570 will be equal to 100. So put in the cash flow here 100. So cash, this one end of the year will be the 2005 beginning of the year. So then 2005, what is the cash and cash equivalent? So you take 2003, then minus 300. So that means it's negative 2000, right? So you do this here, and then if your cash flow tally exactly, that means you are quite confident that you should be confident that you get almost everything or everything correct. Okay, so then now I would have to come to the difficult ones, which is depreciation. Okay, so now how am I going to do? Okay, so that means now how am I going to do is I will do, okay, so that means just follow me. So that means you have property, so this is property at cost. So I do I draw up the structure, property at cost account, then plant bracket cost account, and this one accumulated depreciation for property, and then accumulated depreciation for plant. Okay, so do up the 4 structure first. So then just stick here balance brought down at the beginning of the year 3000, put the balance carried down. Okay, then draw the two lines. I just do the easy one first lah. So balance brought down, balance carried down, balance brought down, balance carried down, then draw the two lines. You see, put a bigger number here, and this one also put a bigger number here. Okay. So just do up the structure first lah. Plant also, 12,000. Okay, you see a bit confusing the question. This figure is a plant at cost. So that means how they put 300 minus 500 is 2,005. 12,000 minus 1,008 is 10,200. Then they add up here. So plant at cost is 12,000. So that means I just also slot in the easy number first. Balance brought down, balance carried down, then draw the two lines. Then here, balance brought down, balance carried down, then draw the two lines. You can don't put a figure first just in case got some things. So then here same, accumulated depreciation, balance brought down, balance carried down, draw the two lines, balance brought down, balance carried down. Here also balance brought down, balance carried down, and balance brought down, balance carried down, draw the two lines. You can leave more space, but because I need to explain to you, I cannot afford to leave more space. So for you, in the workings, draw up the structure and leave plenty of space in between. So then now I will look at the question under additional information. Look at this part of the question, 1, 2, 3, 4 here. Okay, so under additional information, number 1, it says that in the year to August 2004, so that means the 2004, plant that cost 300 was sold at a profit of 20,000. Accumulated depreciation was 215. So the cost that was sold is 300. So that means for the plant, the 300 gone out. So you see, plant is a debit balance in the balance sheet. So that means plant is the cost is a debit nature. If it's a debit nature, the balance brought down will be on the debit side, and on the credit side will be the balance carried down. So that means anything that increase the plant at cost value will put on the debit side. Anything that decreases the plant at cost value, we will put on the credit side, on this side. So accumulated depreciation is a credit balance. That is because in the balance sheet you have the property at cost, then less accumulated depreciation, then you get net book value. So accumulated depreciation is so-called contra asset account. So that means it's a negative, it will reduces the asset value account. So that means it's credit nature account. So the balance brought down will be on the credit side. So that means anything that increases the accumulated depreciation value will be on the credit side. Anything that decreases the accumulated depreciation value will be on the debit side. So plant, same thing. So you see the balance brought down is 12,000. During the year, we sold off 300,000 gone out. Okay, so 300 gone out. Okay, is it here? Actually, all this is not in dollars. So can you please? I left out. Can you please put a bracket $sign thousands? So that means it will indicate that all the workings are in thousands. Okay. Okay. So here the disposal is 300. Okay, the disposal is 300. So gone out from this 12,000. So that means, in other words, the plant cost will be 12,000 minus 300. 300,000 gone out. Okay, so then I look at number 2. In the year, so this is property, it's not plant. Number 3 is preference share. Number 4 is cash deposit. So there is nothing else regarding plant. So then I can close the account. So 300 plus 15,800 is 16,100. So this side bigger, so I put the same number here. So 16,000 minus 12,000, 4,001 must be, this 4,001 must be what we have purchased. You see, this is the plant at cost account. At the beginning of the year, the plant at cost is 12,000. Okay, and then during the year, we sold 300 of the plant. the cost of the plant that's sold is 300. So that means, assuming if we did not purchase any plant, 12,000 minus 300, at the end of the year, our plant at cost is supposed to be 11,700 only. But why is it that at the end of the year, our plant at cost is 15,800? Okay, that is because, okay, 11,000, so minus 15,800 will be 4,001. That is because we purchased 4,001. So now you look at it, this one, you see whether sensible or not. At the beginning of the year, so that means the 4,001 is the balancing figure. You take this one, add this one, you get 16,001. The 16,001 you put here, and this one minus 12,000, you get 4,001. So what this means, what this whole thing means is, at the beginning of the year, our plant at cost is 12,000. Then during the year, we purchased 4,001. And during the year, we sold 300. So 12,000 plus 4,001 is 16,001. Minus we sold 3,000. So that's why at the end of the year, our plant at cost is 15,800. So, okay, then the next year, so the next year, there's no purchase or there's nothing given in the additional information regarding 2005 for plant. So we take the bigger number, 23,000, then put here. 23,000 minus 15,008. The difference will be what we have purchased, the plant we have purchased during the year. You see, at the beginning of the year is 15,008 plus what we purchased during the year will be equals to what the plant that we have, the plant at cost that we have at the end of the year. Okay. Then this one, properties. Okay, so in the additional information number 2, it says, in the year 2005, a property which cost 2 million was revalued at 2.8 million. So these properties, 2004, nothing happened, so it's easy. So this side, we take the bigger number, 4,000, put here, put the same number here. 4,000 minus 3,000, the 1,000 must be what the property that we purchased in 2004 lah. Okay, so here 4,000. Then during the year, during 2005, the property was revalued upwards by 800. Yeah, because they said that a property which cost 2 million was revalued at 2.8 million, right? So that means it has revalued upward. The revaluation increased by 2.8 million, right? Revalued upward by 800,000. So if you want to even look at the other side of the equation, it's also sensible. You see, during the year, the revaluation reserve increased by 800. Okay. So the 800 increase in property value was credited to this revaluation reserve. So we confirm this way. So that means the property value has increased by 800. So you see, on the debit side is increased. Anything that increase the property at cost value, we put on the debit side. So the revaluation have increased the property value. So since there's nothing else, so we see which side bigger. Okay, still this side bigger. We put the same number. 6,000 minus 800 minus 4,000. The balance 1,002 will be what we have purchased. Okay, so then now, okay, so this part is 2004. In 2004, purchase of fixed asset will be 100 plus 4,001 will be 5,001. In 2005, the purchase of fixed asset will be 1,002, okay, plus 720, 7,002, 8,004. So we get our purchase of fixed asset figure. Okay, then we put in the cash flow statement. So purchase of fixed asset, bracket working one, 5,001 and 8,004. Some people like to put purchase of plant there, another one purchase of property. Also can. You can separate here, put separately here, can. Or you put together like this, can. Okay, so then now I get one thing already. So now you see here adjustment for, okay, you see all the cash flow from investing activity is already dealt in this caption. Okay, so under adjustment here, anything regarding the fixed asset, we will exclude it from the operating profit, exclude it. because the profit on sale of fixed asset was initially included in the operating profit figure. So now we exclude it because the cash flow from regarding properties and fixed asset is dealt with under this heading here. So additional information number 1 says the plant that has cost 300,000 was sold at a profit of 20,000. So profit on sale of fixed asset, the 20,000 was already included in operating profit. So now we exclude it. We minus out from operating profit, right? Okay, minus out from operating profit. Okay, so that's why you minus. That's how we get this 20,000. Okay, so then what is the money come in? Okay, from the sale of the fixed asset. Okay, the cost of the fixed asset under additional information number 1, the cost of the fixed asset, the cost of the plant that was sold is 300. The accumulated depreciation of the plant that was sold is 215. So that means the net book value is 300 minus 215, which is 300 minus 215, which is 85,000. Okay, so the net book value of the fixed asset that was sold is 85. But we sold it at a profit of 20,000. That means how much was the plant sold for? The net book value was 85,000. We sold it at a profit of 20,000. So that means the plant was sold for 105,000. So this 105,000 is money come in. Okay, purchase of fixed asset is money go out. That's why I put bracket. This is proceed from sale of fixed asset 105. So this is how I get a figure. Okay, so then now we are left with depreciation. Depreciation, that means we do this accumulated depreciation account. Just now we have already done this. So that means you see this one is properties. We did not sell any properties, so that means this is easy. So that means just now we have already slotted in these figures. The difference will be the depreciation expense during the year. Okay, so this one, plant. Okay, just now you see additional information number 1. Plant that has cost 300,000 and the accumulated depreciation was 215,000 was sold during the year 2004. So that means the accumulated depreciation of the plant sold was initially included inside here. So now we must exclude it because it's sold. Sold means gone out from the company. So the accumulated depreciation of the plant sold also we must take up from the accumulated depreciation. We must exclude it. So over here, this one is a credit nature account. So over here is credit. So anything that make the accumulated depreciation bigger, we put on the credit side. That means the depreciation expense for the year we will add to the accumulated depreciation figure. So that's why it will increase. That's why the depreciation expense will increase the accumulated depreciation figure. We put it on the credit side. Anything that make this accumulated depreciation account lesser will put on the debit side. This side is minus, okay? So if the asset sold, the accumulated depreciation should be taken out from the accumulated depreciation account. So we put on this debit side. So this 215 was the accumulated depreciation for the plant that was sold. So I put this side. So that means now I see which side bigger, 215 plus 310. So this side bigger, put the same number, 3315. Minus 1,008, I will get 1515. Okay, so this part, no complication. So we'll see which side bigger. This side bigger, put the same number. This one minus this one will be this one. So the depreciation expense or depreciation charge for 2004 will be 200 plus 1515, 1715. For 2005 will be 300 plus 1530 will be 1830. So I just put back the depreciation figure over here. So I have all the figures sorted out for you already, dividend paid also, this one. So that means this will be the sum of all the categories, and it should tally. If it doesn't tally, then you check your answer sheet again. Make sure it tallies. If it tallies, that means you are quite confident that you have answered the whole cash flow correctly, and you will get full marks. I mean, you are likely to get full marks. Okay, so in the exam, what if you check and check and it doesn't balance and you cannot afford to waste more time? So that means, okay, this figure beginning of the year you will get from the question paper. So that means this one you use your own figure. That means if it doesn't tally, then I will use my own figure. Whatever figure here, I will add with this. Then I will put my own figure here, not the figure according to the question paper. But hopefully you can get it perfectly tally. But if can't, then you use your own figure. Okay. Okay. So then okay, here this one proposed dividend. So then we got to quickly run through the part B of the question. Because, okay, I will do another lesson specifically for ratios to explain in details what each ratio means. But temporarily right now, I don't want to keep the question hanging. And just do part A, then I don't do part B. I don't like that. So what you should do is, like what I said earlier on, I mean in previously, go to the syllabus guide, copy the formula from the syllabus guide temporarily, and using the formula calculate. So current asset I copy from the syllabus guide. Current ratio is current asset over current liability, and then calculate. So it should be dot dot one. So that means this one 2004 means for every $1 of current liability there is $1.12 of current assets to finance it. Okay, so you can read this. So they said that comment on the financial performance of the company over 2 years using two ratios. So you can pause the videos and read this. Okay. Okay. So then now this one is part B. So debt equity ratio. So also copy from the syllabus guide, and then do up this, and then you can read this. Yeah. So read this is actually quite self-explanatory. Pause the video and then you read this. Yeah. Okay, so then you see these are the cash flow that I want you to do as homework. Even the two questions that I've explained to you, this one 2004 and 2005, both questions I've explained to you. Ignore this. Actually, I've explained 2004 first. So this is one, this is two. Okay. You should also do again, because doesn't mean I've explained to you you know how to do on your own already. So that means you don't see the video, close the video, and then try to do the whole thing again, and hopefully everything tallies, and then with that it will improve, and then also do up all these cash flow questions. Okay. Okay, so this is our website. So thank you. Um, so see you in the next chapter, and please do as much on your part as possible, and I will try to help you. Thank you.